What's poppin', family? I wasn't originally planning to do an episode on this, but I was doing my routine bargain bin stock screen when I realized something that might interest those of you trying to find value in this relatively inflated market. Basically, it seems to me that there's a whole industry being neglected by the market, and today I want to do a quick thing about why that might be and why, just maybe, it shouldn't be. You're watching Semiconductor, and today we're going to talk about the semiconductor manufacturing industry. Now, before we continue, we'd just like to remind you that this channel is meant for general education purposes only and isn't meant to replace the legal or financial advice from a paid professional. When it comes to investments, it's always healthy to take everything with a fair bit of skepticism, regardless of the source, and that includes us. I mean, how else are you supposed to figure out what's right for you if you don't? That being said, no mention of any stock on this site should be taken as financial advice since we can't know what kind of security best suits you, your needs, and your goals. We'd love it if you could do us a favor though, like this video and subscribe to the channel and stick with us as we explore ways to figure out whether or not a given asset is right for you. For everyone who's been with us for a time, please do us a favor and drop a line in the comment section if you've got anything you want us to touch on, but in the meantime, let's get to business. Alright, now what if I told you that Korea's semiconductor industry is one of the strongest in the world? You'd probably say dunno and turn off this video. But what if I told you that it was getting stronger in a segment that others have been sleeping on? Maybe that'll wake you up. And, well, that's why I'm making this video in the first place. Now, everybody and their mama knows that SK Hynix and Samsung Electronics are dominant players in the global semiconductor industry, with the two companies combining for over 71% of market share, RE Dynamic Random Access Memory or DRAM semiconductors. We've known this for a long time because the two companies are two of the largest cap stocks in the country. But you may have missed a big change to the industry that occurred last year that initially seemed like a problem but has turned out to be quite good for the industry domestically, so I'm gonna break it down real quick. Alright, if you were around and awake back in 2018, you may remember the legal decision by a Seoul court that ruled that Nippon Steel would need to compensate surviving Korean workers for their former wartime labor. This soured relations between Japan and the ROK in a way that it hasn't really recovered from, and that eventually led to things like Japan's removal of Korea from their whitelist and, more pertinent to this video, increased export controls on material, component, and machine products for chip manufacturing, and this happened around this time of the year in 2019, so 2 years ago. Now, this was obviously worrisome for an economy in which the largest conglomerate stakes its name on semiconductor manufacturing. And for this reason, the government went into recovery mode and, in an attempt to reduce the country's semiconductor industry's reliance on Japan, made an effort to nurture the domestic market for companies in the semiconductor business-to-business space, i.e. chemicals and manufacturing products. 2 years out, well, I'm of the opinion that they did a pretty damn good job in the short time, because our country's reliance on Japanese hydrogen fluoride dropped from 50% to 10%, and for another material called photoresist, they've reduced their reliance on Japanese production to less than 50%. And this was done through a retooling of supply chains that kind of redirected our imports from Japan to Belgium. In fact, Business Korea reports that last month the government spent 1 trillion won to fund domestic material, component, and equipment suppliers. And while these improvements are significant, the trade disparity between Korea and Japan in this sector is still quite massive, and it'll take a continued effort to develop a self-sustaining industry, or at least one that doesn't rely on one of the country's most volatile trade and diplomatic relationships. So that being said, it doesn't seem too wild to claim this industry as being young and bright because, again, the government only really had a vested interest in developing and nurturing the industry over the past couple of years. Now, with government support and policy and lots of big money relying on their expansion, the semiconductor part suppliers and chemical suppliers are in a good position to grow big fast. So who are these companies that we're talking about? Well, there are a lot of companies out there that are really trying to get in on this push by the government, so it's hard to really say who the biggest winners are, but here are some of the ones that are the most noteworthy and have been over the past couple of years. Now, the top 3 key companies are SK Materials, Seoulbrain, and Hansol Chemicals. Of the 3, Seoulbrain has been the firm with the most action, executing a corporate spin-off last year that saw the old company convert to a holdings company and the new entity focusing mostly on the semiconductor and materials business. On the next level down, we see some lesser-known companies like Chusung Engineering, whose stock has doubled in the past year, Hynix Materials, whose assets are 8 times the size of their liabilities and have basically no debt if you consider how much they have in cash, Eugene Technologies, whose capex has been shrinking while they've been scaling up their R&D over the past 3 years, and a few more players like TESS and DB High-Tech, who both have balance sheets that look just as healthy and threat-free as the others. An important thing to note about all of the companies I've named so far is that they have positive PE ratios, which just means that none of these companies have lost money in the last year, and could very well be reflective of the rapid growth of the industry domestically. Finally, below that we have another level of company that so belongs on the sleeper list that it straight up inspired me to make this whole video in the first place. And down here we got two companies called Songdo and PSK Inc. Songdo is a really interesting option because at the time of writing this and recording this, their PE ratio is quite literally 1.08. This just means that to own their stock, you basically have to pay the equivalent of their per share earnings. On top of that, their price to book is at 0.4, with each share owning 15,000 won of book value, and their price to sales is at 0.2. Now, to throw you for a loop a bit though, their operating profit from last year was negative 30 billion won. And as good as their other stats look, that is not something that you can easily overlook. Now this could just mean that they spent way more to pay off their debts than they were able to net, as it seems to be the case to me, but you have to look for that for yourself. Don't trust me on that one, I haven't done a real deep dive. This is one of those situations where it's really tough to tell what the future of the company is going to look like just from these numbers. Now the other company, PSK, has a PE ratio of 3.1, which is a little bit higher but still ridiculously low. They have a 1-year return of 87.13%, and just like the others, their assets more than cover their liabilities. And this is a good sign, especially in the case of a market downturn, because if a company is able to cover their liabilities and able to cover their debt, then even if the market does take a downturn, it's not like they're going to be scrambling to stay alive, and it's very difficult to crash a company that has more money than they owe. Now PSK, the company itself, is a holdings company that functions mostly as a supplier of semiconductor packaging equipment and photoresist stripping in semiconductor manufacturing, which might not mean anything to you if you don't know anything about semiconductors, but I mean, actually, I will link their website down in the comment section below. It's fully in English. You can read about it very easily if you would like. But this begs the question, why highlight all of this? Well, to be honest, to me it just seems like a slept-on sector in a market where virtually nothing is being slept on anymore, and with the tailwinds of government assistance pushing them onwards, it'll be interesting to see how quickly the country will be able to grow their support systems for one of the most important industries. On top of that, with Thursday and Friday taking consecutive losses this week, I wanted to go ahead and remind everyone that there are so many other things going on outside of a given stock's price action. It's always best to remember when everything is power sliding downhill that the key is to always watch the company and not the price. This is how you'll know whether you're buying a dip or throwing your money away. Now before we close out, I want to make note of the recent passing of SK Hynix's proposal to acquire Intel's NAND business by the UK's antitrust body. All they're waiting for now is for China's regulating body to approve the acquisition, and SK Hynix will move up to second place in the NAND market. But the distance behind Samsung would still be too significant to claim a monopoly in the industry, which makes the deal more likely to pass through. Remember that China is the biggest market for semiconductors, so any manufacturers trying to complete an acquisition or a merger would have to get their approval in the first place anyways. Alright, that's it for me today. Hope you're doing well and surviving the heat. Low-key, I finally bought a dehumidifier after 9 years of suffering through summer, and that little guy fills 16 liters in about 4 hours on low power. If you got the funds for it, I highly recommend buying one because these things will change your life. In any case, do your best to stay safe and continue to practice social distancing until this plague is no longer upon us. Much love, family. Peace.